In the previous video, we stopped at this slide. Now we will continue our discussion on internal control chapter. Let's move now to the fourth component of the COSO frameworks, which is about information and communication. COSO combined information and communication because high quality information must be communicated appropriately. When we say high quality information, what do we mean? We mean that information is relevant, accurate, and available on the time we need it. Communication is not important only to management or only to the board of directors. It's important to be information are important to be communicated to individual at all level of the organization who needs such information to run the business effectively. Information must be provided to specific personnel as appropriate to support achievement of their operation, reporting, and compliance responsibility. Communication must be taking place more broadly relative to expectation, responsibility of individual and a group, and other important matters. What does this mean? Some people might think communication, for example, we need to communicate what happened or how many products we introduced or how many profit we make. No, communication is not limited to that. Communication also include what we expect from that person or that manager to perform. What are the responsibility over on or what are the responsibility of that employee or that department. For example, job description is one way of communication because it states what are the responsibility of a specific employee. COSO did not limit communication just inside the organization. Communication with external parties also are important and can provide critical information on the function of control. When say external parties, we mean customers, suppliers, service provider, regulators, external auditors, and also shareholders, and there is more. How communicated could be made? Communicated could be made either on hard copy, like documentations, or through meetings, face to face. This is a way of communication. Also electronically, through emails, WhatsApp, and so on. And also, and the most important way of communication, the action speaks louder than words. What does that mean? Means that management action powerfully communicate what is important to the organization. For example, commitment. A manager who arrived early before anyone arrived, for example, 7 a.m. or 6:30 a.m. This action from the managers give the employee a message that commitment to time is important. The culture of the organization as well as the content of the information shared will dedicate the best method of communication. So, for example, high sensitive information could not be, for example, sent through emails. For example, they must hand it on a hard copy because they must the emails might have hackers or somehow we will lose the information. Because individual aspects and process information differently, most organizations will use a combination of media to ensure that all individuals can process and understand the information provided to them. Clearly, the culture of an organization play an important role in communication, its priorities. Typically, organizations that have established culture of integrity and transparency have an easier time to communicate than other organization who doesn't. Now we will move to the fifth component, which is the mentoring activity. Um, COSO in this component indicate the mentoring activity consists of ongoing evaluation and separate evaluation. For internal control system to remain reliable, it must be mentored. We must mentor or supervise the internal control system to make sure it's work effectively and is still reliable. When we say ongoing evaluation or a separate evaluation, what do we mean? Ongoing evaluation, it's evaluation that built into the process at different level of the entities and provide timely information. The separate evaluation is conducted periodically. It's vary in scope, also the frequency, depending on assessment of risk, the effectiveness of ongoing evaluation, and any other consideration. The ongoing mentoring or the regular mentoring occurs in each of the five components, not only one component. In all the five components, we must build ongoing evaluation or ongoing mentoring activity. This method is embedded the important activity into the process performed during day-to-day business operation and allows to occur regularly, catching problem before it become unmanageable. However, the separate evaluation lack the advantage of the ongoing mentoring due to the timing because they done less frequently and also later in the process they will not catch the problem sometimes before they become unmanageable. Despite the various advantages of the two different methods, for mentoring, both are needed. So we need to have a robust mentoring process. We need to have mentoring, ongoing mentoring, as well as separate evaluation. And these two evaluation, we might discover deficiencies, and the deficiencies we covered or we identify must be communicated to management and the board of directors as appropriate. So there is some deficiencies that is appropriate to management to be communicated to management, and there is some others that are more important must be communicated to management and the board of directors. The more robust and comprehensive the supervisory and verification process, the more confident management can place in the effectiveness of this procedure to ensure constant of reliable ongoing operation. So the more strong supervisor system we have, the more confident we will have on the internal control system. With effective ongoing mentoring activity and dependable risk assessment, the frequency or the needs of separate evaluation will be reduced. The mentoring activities we could there is example of mentoring activities. We can list them in four categories. These are either we have ongoing non-independent mentoring or ongoing independent mentoring. Also the separate evaluation, we have an example of separate evaluation that are non-independent and separate evaluation that are independent mentoring. For example, here reconciliation activities such as bank statement, bank reconciliation, sorry. Bank reconciliation, it's some of the process that are built into the system. We are usually organization put it as a process that must be done each month or each week. So it's embedded into the process of accounting. However, it's done by the accountant, and the accountant are not independent. Here, an example of continuous auditing techniques. For example, the programs that might build into the audit programs that implemented by auditors. These are example of ongoing because they are built into the system and then they are done frequently in a regular basis. However, the report are sent to an outside auditors or to the internal auditors, and both have independency. So it's ongoing independent mentoring activities. Also, the third type is the separate of mentoring activity is the separate evaluation, non-independent mentoring. An example is here management compliance activity. Management could done a review to make sure that the company is compliant with a specific regulation. However, such a compliance it's not usually done in a regular basis, so it's a separate evaluation. However, it's done by management, and management are not independent. Here, the fourth type is separate evaluation and independent mentoring. An example is internal auditing function activities. The internal audit usually done his evaluation separately. It's not done, or they are not built into the system. It's a function that is independent from the other function in the organization, and it's done by internal auditors who is independent from the organization activity. The mentoring activity are most effective when are they applied on a layered approach. What do we mean? That we have 3 layers to apply mentoring. The first layer is the less independent, and the third layer who have the enough independent. The third layer represents the internal auditor, for example. The first layer is the line management, or the management who does the activity itself. The second line represents a more higher level of management, for example, a senior management who not involved as much as these managers, however, they oversee these management. The layer approach provides the organization with higher level of confidence that the system of internal control remain effective and help ensure that internal control deficiencies are identified and addressed timely. This strategy is often referred to a multiple line of defense, and the one we covered in chapter 3, which is the governance chapter, is one example. When we see deficiency or a major deficiency, what do we mean by deficiency or a major deficiency? Deficiency is also defined as a condition within an internal control system that worthy of attention. So if something wrong in the internal control system, we call it a deficiency. Deficiency may represent perceived potential or real shortcoming or opportunity to strengthen the internal control system to provide greater likelihood that an entity achieves its objective. How that's? Because if we find the deficiency, we will know how to fix the internal controls before the problem become unmanageable. A deficiency or a combination of deficiencies that severely reduce the likelihood of achieving an organization objective is referred to as a major deficiencies. Management exercise judgment to assess the severity of these deficiencies or the combination of the deficiencies and determine whether component and relevant principles are present and functioning and components are operating together, and ultimately in determining the effectiveness of the entity system of internal control. Deficiencies identified as a result of either ongoing mentoring activity or a separate evaluation. Organization worldwide that must support or must report in the effectiveness of their system of internal controls to external parties can design the type, timing, and extent of mentoring activity that are performed to provide support for assertion that the internal control operate effectively at a specific point in time over a particular period of time. In this exhibit, CASO represent of the mentoring process relative to supporting conclusion regarding control effectiveness. So, to shorten the mentoring process, we have big three steps. First step is establish foundation. We tone at the top. It's one of the most important principle. Then the second step is design adequately. Design and execution. Design and execution start with proprietary the risk, identifying then the control, and then identifying the precise information about control, and then implementing mentoring procedure. The last step of the mentoring process is assessing and report, which is start with prioritize our finding depending on the execution, report the result to the appropriate level, and follow up. So for example, the deficiencies we report, we must to have a follow up action. This is all. This is what is a mentoring activity. Now we will move to the principle. COSO have 17 principles. 17 principles are divided into the 5 component of the COSO framework. It helps to set a direction on how to build a well-designed internal control system. Now we will move to rules and responsibility inside the internal control system. First, we will talk about the responsibility about management. Management has ultimate responsibility for the adequate design and effectiveness operation of the system of internal control. The CEO and the CFO set the tone at the top, and this tone at the top will roll down from senior management to the line management and to every individual. There is difference between smaller organization and larger organization. In a small organization, the CEO very directly will affect the internal control system. However, in the large organization, the CEO will affect the senior management, who will influence their subordinates. In this way, senior and line managers act as CEO over the areas which they are responsible. Board of Directors. What are the responsibility of Board of Directors? Board of Directors has the ultimate responsibility for overseeing management and the system of internal control. So their responsibility oversee management, also provide direction regarding internal control. Effective board member means effective internal control system that discover and prevent the management behavior, considering override control and suppress evidence of unethical behavior or fraud. Because one of the most risk facing in the publicly traded company especially, it's that management will override the risk. So the management, they are the one who has the authority for mostly everything. So they can sometimes override or do not follow, in another word, do not follow the internal control. And thus, a risk that could be controlled by an effective board of directors. The internal auditor's responsibility. Internal auditor's responsibility is to verify the management has met its responsibility. Also, one of their responsibility is to assist the organization by evaluating and promoting a continuous improvement. When internal auditors verify the management assertion or verify if the management has met its responsibility or not, in this way he will evaluate the adequacy and the effectiveness of in control and response to risk. Also will validate the assertion. So management here will give its opinion on the design and effectiveness of operation of the internal control. Then the internal auditors will validate that assertion given by the management. Internal auditors communicate findings and interact directly with management, audit community, and board of directors. Internal auditors play a significant mentoring role and assist management to evaluate the system of internal control and reporting. Responsibility, it's not only limited, the internal control responsibility, it's not only limited to these all three. We said earlier that it's every individual. Also, there is some responsibility on the frontline personnel, for example, and also there is some responsibility on the independent outside auditors. The independent outside auditors usually provide their opinion over the ICFR. Also, there is a responsibility for customers, like when because we share information with customers, so they have some internal control responsibility. Also, regulators and suppliers and so on. So every individual who are involved or have an interest in the organization has a responsibility. Limitation of internal control. COSO says that recognize that while internal control provides reasonable assurance of achieving the entity objective, limitation do exist. So even an effective system of internal control can experience a failure. Inherent limitation of internal control could result from the suitability of objective, establishing the nature of a human judgment in decision making, breakdown, and the ability to override internal control. Also, there is limitation if we, for example, have a segregation of duties. These three personnel that I divide or segregate the duties, they may have collusion. They must make a fake transaction together. There is some external event that beyond the organization control. So internal control cannot also prevent bad judgment or decision or bad decision, because we don't know. People doesn't know what will happen in the future, so there might be bad judgment, and that this bad judgment is one of the inherent risk that internal control try to manage. However, it will not give an absolute assurance to not have a bad judgment. There is a direct relationship of the risk mitigated and the cost. So, if we have every time we build control, control is not free. Controls take time and take money. So there is direct relationship between the amount of risk mitigated and the cost associated with implementation control. So the organization must ensure that it has neither excessive risk nor excessive internal control. For example, this exhibit lists some of the possible consequences of accepting excessive risk or implementing excessive control. Here, what are the consequences if we have excessive internal control? So, if we have too much control or control that we don't need, and here the consequences of accepting excessive risk. So, we have risk that we do not manage it as appropriate. For example, potential of loss of assets. So if we didn't manage the risk, we might lose some cash or might lose some any other assets. Here, an example is increasing a cycle of time. For example, if we implement too much internal control, if we put 3 or 4 person authorize a sale transaction, will increase the cycle of time. Instead of making the sale in one day, we might need 3 to 4 days to make a sale, and that might cause losing customer and then losing assets. So we must have balance. An organization accepting a higher or lower of risk is depending on the nature of the risk, the regulator environment. So, for example, organization in the food markets is different than the organization in the oil market, and also the balance that management is able to achieve result is also depending on the management fee, loss of fee. So it's a very hard process that needs experience and good skills. There is some factor that must consider in managing risk, especially when determining the specific action to manage the inherent risks to the acceptable level within the risk tolerance. First, we need to begin, or we need to consider the controllable risk. What do we mean by controllable risk? Is the portion that we can, of the inherent risk that we can or directly influence or reduce in day-to-day business activity. In other words, the risk that we can control. Once management has implemented cost effectiveness on the controllable risk, then the management can determine if the organization is operation within the overall risk appetite or not. If the remaining the uncontrolled, the risk that we couldn't control, or we call it residual risk, is less than the acceptable risk appetite, then the system of internal control is operating and within the risk appetite. However, if the residual risk exceeds the established risk appetite, is necessary to reevaluate the system to determine what other additional action or other additional cost-effective control we can implement. If management if we couldn't have another action to reduce the risk to the acceptable level, we management must consider the other option like sharing or transferring the risk. However, sometimes will not work, or the the nature of this risk could not be shared or transferred, then management must decide either to accept the higher risk or to um, just stop from executing that activity that causing that risk. Now we will talk about the classification of the type of control. This is the last uh, subject we will talk about in this chapter. Controls can be classified in a different way and one control could be classified in different classification. For example, one way of classifying control is either on the entity level or process level or transaction level. This is way of classification, classify and control. Also, regarding the importance of control, we can classify control either a key control or a secondary control. However, and also we could have, like for example, an entity level control as well as a key control, and we must classify. We could classify control as a process level control as also a secondary control. However, an entity level control could not be a secondary control or a transaction level control at the same time. There is also the entity level controls also are divided into governance and management. And so every entity level controls could be classified as governance or could be classified as management oversight control. Also, we have preventing and detecting control, which you already know or you already covered in the accounting information system. Preventing, it's a stop the risk from happening. Detective, it's stop the risk or deduct the risk after it happened. Also, there is the control over information system. They are divided either to control, computing control, or general computing control, or application control. General computing control is like more entity level, and the application control is more in detail. This is the last things we will cover in this chapter. I hope you enjoy this chapter and good luck.